Change, but down 1 point right now. That is a drop of less than 0.1%. The Dow holding on to a gain of 129 points, now up by 0.3%. NASDAQ 100 index both in the red, but the Russell 2000 certainly the outperformer today. The Russell 2000 up by 1.8%. Again, to put that in context, S&P little change, down by 0.1%. 10-year yield 4.16% with a 2-year 4.46%. Gold down 0.3%. 2019 the ounce, and West Texas Intermediate crude up 0.1%, 76.89 a barrel on WTI. Nvidia erasing a rally that sent its market value above that of Amazon. Nvidia shares are higher right now. They're up by 0.3%. Amazon lower by 1.3%. So again, recapping, S&P little change, down 1 point, drop there of less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Masser, along with Tim Stanovic, live here on Bloomberg Business Week on radio, TV, YouTube, and of course on Bloomberg Originals. Well, the recent issue of Bloomberg Markets magazine noted for many investors, credit has taken center stage, and among the fastest growing segments of the market, private credit. On that, concerns have also been raised about a so-called maturity wall in the private credit industry. Tim and I, we talk about this a lot. We feel like the last couple of years, but I'm sure it's a lot longer than that, that people, investors, certainly institutional investors, have found lots of opportunities in private credit, and the industry just continues to grow.
Yeah, the concern here is that the impact of a pandemic-era borrowing spree is set to hit companies hard this year, and the prospect of higher for longer interest rates ratchets up the risk that a sharp spike in debt maturities this year and in 2025 will have to be refinanced at much higher costs, which would raise the potential for defaults, including in private credit.
Hence the so-called maturity wall. All right, so our next guest says the 2024 maturity wall is a myth.
Oh, okay.
Let's get to the interview.
We
want to get into his reasons why. And on this often talked about investment space, private credit, it feels like everybody's agog when it comes to it. With us is Bill Cox, Global Head of Corporate Financial and Government Ratings at KBRA. They are the research arm affiliated with the Kroll Bond Rating Agency. And Bill is joining us on Zoom in New York City. Bill, good to have you here with Tim and myself. So let's get right to it. No maturity wall. Tell us how you came to that conclusion and exactly what you looked at to get to that conclusion.
Hi, Carol. Hi, Tim. Thank you for having me. Yeah, KBRA's got a pretty unique view into an otherwise opaque market. We've rated hundreds of private credit funds, their leverage facilities, their CLOs, and 29 of the BDCs in the industry. And in addition to that, 3,000 underlying corporate credit assessments of the borrowers in the past 2 years alone. That gives us a really rich set of data to separate the fear from the fact. And it turns out by looking at that data and that portfolio is a pretty good proxy for the industry as a whole, that looking at that data, we only see about 10 to 15% of the loans maturing in the next 2 years, which is pretty comparable to the broader corporate bond market. And so we don't see there being systemic risk or any kind of broad concern, but certainly some idiosyncratic risk for specific borrowers.
And you mentioned BDCs. Of course, you're talking about business development corporations, and then you talked about, I think, collateralized loan obligations as well. So I just wanted to make sure that was clear.
Okay, so Bill, tell us where you are seeing areas of concern. What industries, what segments specifically?
Yeah, it's more the type of company. So if you separate out the borrower risks from the lender risks, I'll address both of them if that's okay, Tim. And so from the borrower perspective, look, if you're a earlier stage company or a company that hasn't met its growth targets and you happen to be approaching a refinancing need, then you're likely to have even higher costs of debt. Spreads will be wider, covenants will be tighter, and your valuation is likely to be weaker. So for those companies' sponsors and their lenders, they have a lot of work to do. We do expect there to be an increased number of defaults, but again, idiosyncratic special cases. On the lender side, if you're a relatively new entrant that joined the market in the relatively robust periods of growth over the past 3 years and maybe don't have as deep a bench as the more established players, then you might struggle, particularly if you weaken your lending standards to get into the industry. and those who play in the mezzanine space might be doubly concerned given what we're likely to see in terms of increased costs.
So you're not worried about the KKRs, the Apollos, the Blackstones, the Ares Management. Those aren't who you're worried about. You're worried about potentially some of the smaller players.
Yeah, I think that's fair with regard to especially those that were niche or very industry focused and or earlier stage smaller company focused.
Bill, there's also, I mean, when did a lot of the companies that we're talking about here, in general, is there an average time period or interest rate that they got when they took out this debt? I mean, what are we talking here compared to what we're seeing rates at right now?
Yeah, that's a great question, Tim. So the debt typically is 7 years. The spreads are typically 6.5 to the base rate, and most of the companies before this recent run of Fed rate hikes were paying 7.5%. Right. So then with the Fed rate hikes, and we ran a stress on this 2 years ago, thinking that all-in interest costs of 12% might be, very conservative. But here we are. We're at 12% all-in rates now. The good news is that these loans are typically variable rate, so the shakeout is already occurring. So it's not just going to happen when refinancing has to take place, as is the case in other industries. But private credit loans tend to be variable. A significant percentage of the industry tends to be hedged, at least to some degree. But you will see increased levels of default amongst those companies that simply can't afford the 12%.
How much, though, is going on among the loan providers, the providers of private credit, to make sure that actually there isn't defaults and saying, let us work with you on this? So maybe we pull it in a little bit. Maybe our margins are going to be so on it, because it's to their benefit, those who are providing private credit, right, that everything doesn't start to come undone.
Yeah, that is a really interesting question. What we haven't seen is lenders compromising their position or offering more generous terms. If anything, spreads are wider, particularly for companies that might be at risk. What you are seeing in the industry are private credit lenders identifying more and more of their borrowers onto watch lists, working closely with sponsors. And sponsors and lenders sitting down and working things out. We have seen some extensions, some modification of terms or covenants, but not the big wave yet that many are expecting to see, partly because 12% has only just arrived. We all know that interest rates have been going for a while, but if you're a borrower in this space, the fourth quarter, maybe late third quarter, was the first time you saw the full impact of 12% interest costs.
We've talked a lot about higher for longer, and in that case, so is this just a case, Bill, of the timetable being pushed out? So in other words, if it's not now or in the next year or so, but maybe 2 years from now, that it could be a little bit more problematic, especially if you think about what if, the Fed is cutting rates because the economy is coming undone. And so you think about that impact too on those borrowers in the private credit industry.
Yeah, and Carol, we wrote a piece about that about a year ago. Basically, higher for longer changes the dynamic in the private credit lender and sponsor industry. It's not like the COVID period where they could sort of kick the can a little bit and things worked out and the money started to flow. This is a perhaps sustained environment in which the kinds of valuations that companies receive, the amount of debt that they can borrow, and at what cost might be permanently changed. And we're seeing that dynamic play out. But again, it's idiosyncratic where we see risk. We don't see any kind of systemic breakdown of
even in real estate, even in the real estate area, just real quickly. No crisis looming, and just got about 30 seconds.
So I think in real estate, depending on the market, there are some issues out there. But again, I'm focused here mainly on middle market corporate borrowers.
All right. Really appreciate it. A window into a market that, the private credit boom that we've seen in terms of 28, we've seen, assets go from $721 billion in 2018 to last year being $1.6 trillion in terms of the growth in different companies tapping into private credit.
Yeah, Preqin says it could hit $2.8 trillion around the world by 2028.
Pretty amazing. Bill Cox over at KBRA, Global Head of Corporate Financial and Government Ratings. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the names reporting today after the close of trading, we will be hearing from Arista Networks, Cadence Design, and Lattice Semiconductor. We'll have those numbers for you as they cross the Bloomberg. ARM holding shares surging again today. Right now, ARM is advancing by 24%, have been up as much as 42%. ARM is extending last week's rally that was fueled by a revenue forecast that far exceeded the average of analyst estimates. Again, ARM shares up right now by 24%. A mega deal in the oil patch. Diamondback Energy is buying fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal to create the largest operator that is focused on the prolific Permian Basin. Endeavor, not publicly traded. Both companies are based in Midland, Texas. Today, we've got shares of Diamondback up by 8.9%. Gilead Sciences has agreed to buy Sema Bay Therapeutics, a developer of an experimental liver disease drug, for $4.3 billion in equity value. Gilead offered to purchase all the outstanding shares of Sema Bay for $32.50 a share. That is a 27% premium to Friday's close. Gilead trading higher by just about 0.8%. Sema Bay up by 25.1%. Hewlett-Packard Enterprise is seeking as much as $4 billion from Autonomy Corp's former bosses following a London judge's finding that they fraudulently boosted the value of the company before its sale. HPE, Hewlett-Packard Enterprise, is now trading higher by about 0.7%. And those are some of the top company stories for you at this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovec and Carol Masser live from Bloomberg headquarters in New York. Hey, let's get a check on latest world and national news. We got Nancy Lyons standing by in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Israel is asking UN relief agencies to help evacuate civilians from Gaza war zones ahead of a ground offensive in Rafah. The town is on the border with Egypt and is full of displaced Palestinians. Israel has been conducting airstrikes on Rafah that have so far killed another 60 civilians. British Foreign Secretary David Cameron is asking Israel to wait.
There's nowhere for them to go. They can't go south into Egypt. They can't go north and back to their homes because many have been destroyed. So we are very concerned about the situation, and we want Israel to stop and think very seriously before it takes any further action.
Cameron says a sustainable ceasefire is what should happen. Israel was able, though, to rescue 2 hostages under the cover of those airstrikes. This year's Super Bowl ads did a good job of enticing over 100 million viewers with celebrities. Ad guru Johnny Deutsch believes one of those star-studded ads topped all the others.
By far, the best one was Doug King's. I think the fact that you had monster celebrities in there. You had Ben Affleck, you had Matt Damon, you had Tom Brady, and J-Lo, of course. So self-effacing, and I thought Matt Damon actually stole that ad.
Ad guru Johnny Deutsch. Long-shot presidential candidate Robert F. Kennedy Jr. is facing blowback after using his uncle's political ad from 1960 to advance his own campaign. Family members are highly critical of his use of the ad, especially considering his anti-vax views that are contrary to his uncle's views toward health care. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Tim and Carol.
All right, Nancy Lyons, thank you so much.
Nancy's at work today.
Nancy's at work.
Nancy's at work. You're at work today.
No Super Bowl Monday holiday for her.
I'm at work today.
I'm at work. I'm a little tired. I'm going to
do You watched the whole thing and then some.
Well, we DVR'd it, and I was
Okay.
doing some work, and then I had to walk the dogs, and so we started watching late. And then ultimately, so we were behind the time. I'm like, don't look at the headlines. Nobody was reading. My husband and I were like, okay, don't read anything because we don't want to know who won. And then we got to 2 minutes before the game ended, before they went into overtime. And then it jumped because our DVR had run out because we were so behind or whatever, however that works. And all of a sudden, we see them giving the trophy away. I'm like,
All right, so
no, don't
spoiler
look.
alert: the 49ers lost.
Yeah,
is
no,
what
no,
you're
no.
saying?
Okay.
Okay.
We did go back to YouTube, though, to find it because I really wanted to watch the overtime because it was incredible.
I actually watched the fourth quarter and then overtime.
Yeah, it was incredible.
It was great. That was, and my in-laws were there and they said it was. You didn't miss much in the beginning.
It was a very
I
slow.
won $20.
score.
I did a Super Bowl box. I won $20
Well
in the first
done.
quarter. Thank you.
The
Thank
first
you.
half was a little boring.
Okay.
First quarter was a little boring.
Hey, the reason we're talking about this is because there actually, believe it or not, have been discussions about whether or not to make the Monday after the Super Bowl a national holiday. And here's what I'm thinking, Carol.
Crazy.
If we can't come together and make the national election every 4 years a national holiday, the presidential election, how can we come together and make the day after the Super Bowl? I think there's
Folks,
actually might be more support for that.
You need to have your priorities straight. I'm just going to say, I mean, come on. Or what was the other one? Moving it to Saturday. I actually put a Twitter poll out.
Oh, what'd they
or
say?
an X poll. I'm looking for it.
We're going to wait on the polling to bring you the details.
Yeah, exactly. I got to see.
We'll tell you after. We'll tell you in the next
But
hour.
it's interesting. Like, I mean, the other idea is like, you can't move it to Saturday. It's a Sunday
No,
game.
it's a Sunday thing.
It's interesting. But they're talking about 16 million Super Bowl sick days. I was surprised Paul Brennan, our producer, who I thought always takes off on Mondays. Oh, only when his team is in it.
okay.
Nice.
Sorry, Paul. Pats didn't make it this year. Always next year.
I'll get up to. I'll check the poll and find out kind of how things are going and certainly report on it. All right, everybody. If you're watching on TV, continue. They're going to count you down to the close. It's coming up next. More on Business Week, right here on Bloomberg.
The big game.
The big game. Yeah, I am feeling a little tired. Stocks off their best levels of the day. In fact, a little bit of a mixed market. Little changes overall, though.
So what you're saying, it might not be a record day on the S&P 500 today?
Might not.
We're allowed to have those, I guess.
We did have a record on Friday.
We did, yeah.
About 5,000.
We've had a lot of records so far this year. Hey, live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and Bloomberg Originals. I'm Tim Stenevec. That is Carol Masser. Hey, speaking of the equity market, so much for Wall Street strategists' year-end targets when it comes to the S&P 500, as the benchmark does hit record after record.
Could get snarky, but we won't go there. But we are going to talk about it. Speaking
Are you
of
going to say
records-
something about strategists' year-end targets? The crystal ball being a little foggy?
Yeah, it's a
Okay.
little foggy. Speaking of records, expected to, I think, be another record audience for the Super Bowl game. We're checking. We keep tracking for numbers and looking to see what we might see. But Las Vegas now, a serious sports team. Who would have thunk if you go back years and years ago? We're going to have more on that. We're also going to tell you about the tank-topped former NFL punter who speaks the gambling-infused language of younger fans. You're going to want to stick around for that one.
We're also going to be joined by Anna Bryson, CFO at Doximity. It's been called the LinkedIn for Doctors. She's going to be joining us to talk about the record engagement that she's seen across its platform.
Also, we've got GoFundMe's CEO stopping by and hitting a $30 billion milestone. Also, on what they do on the platform that really kind of reveals and tells a lot about societal trends.
And this is not breaking news. Everybody knows this. There's not many women in the C-suite. Still, Michelle Rice is one of the few that there are. We're going to talk media and programming for the African-American audience with the president of TV One and Clio TV.
All right, first up, let's get back to those markets and check on your top business stories this day after the Super Bowl. Hey, Charlie
Well,
Pellet.
hello there. We are looking at a market, the S&P that is little changed right now. The S&P lower by 5, down 0.1%. For much of the morning, the S&P was trading higher, but sold off early afternoon. Right now, we've got the Dow, though, holding on to a gain of 106 points, up now by about 0.3%. NASDAQ down 53, a decline there of 0.3%. NASDAQ 100 index down 0.5%. Important to point out, though, that the Russell 2000 is rallying 1.8%. Bitcoin was trading back above 50,000 today. Right now, 49,707 on Bitcoin. It is up now by just about 3.3%. 10-year, 4.17%, with a 2-year, 4.46%. Gold down $4.50 the ounce to 2019, down 0.2%. And West Texas Intermediate crude oil higher, up by about 0.1%, 76.88 for a barrel of WTI. Keeping an eye on both NVIDIA and Amazon. NVIDIA rose to a fresh record to overtake Amazon's market cap as the artificial intelligence-driven rally makes the chip company the fourth most valuable U.S. stock after Apple, Microsoft, and Alphabet. Right now, we've got Amazon down just about 1.5%. NVIDIA shares, they are pushing higher now, up by 0.3%. Again, recapping, S&P 500 index lower now by 5, down 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really appreciate it. Well, the S&P 500 has now rallied about 22% since the October 27th low. Another move higher today, earlier in the day, to another record. Not so now, though. But if it does finish in the green, it is going to be another record. That spree of records, Carol, for the S&P 500 has quickly propelled it to the historic 5,000-point mark and beyond. Now has the benchmark poised to trounce even the most bullish year-end forecasts among prognosticators, only 2 months into 2024.
Yeah, the quick move up in the S&P 500 has some Wall Street strategists now saying the biggest risk to the S&P 500 in the near term is upside. So with more on this, let's get to it. Bloomberg News Equities reporter Alexandra Semenova is here in studio with us in our Bloomberg Interactive Brokers studio. So let's talk about this. The move up, Alexandra, to 5,000, above 5,000 this year. It happened really quickly.
It did. It's great to be on with you guys. You mentioned earlier that Wall Street's crystal ball is foggy. I would say it's way more than foggy. It's shattered. It's been really hard to be a market forecaster these past 2 years when the economy has defied expectations, when everyone thought that interest rates would, thwart us into recession and tank corporate earnings, and that just hasn't happened yet. And
do they historically get it right? Let's be fair. Like, if we go back over that, I feel like we always get to the end of a year and we're
it's a great gig
all
to
right,
have,
guys,
right?
you didn't get there.
Yeah, there's a really great analysis from one of our market strategists, Cameron Kreis, and he found that there's essentially zero correlation between these year-end numbers that strategists put out and what the stock market actually does. And so it's making everyone wonder what is the point of these numbers, and usually it's to give investors a sense of direction of where a bank thinks that the market will go, but they're often so far off with these very specific numbers that they put out, and especially right now, going into the year, everyone thought that 5,000 was the bullish call, and we're already blowing past it. If you look up a neat function on the terminal, go to the S&P 500, SPX equity, and then ANR, you can see a roundup of all of the big banks' targets. And the average is about 48.18 right now. We're already 200 points above that, and we're still in February.
9.5 months to go in the year.
Okay,
so.
which means we could certainly dip back. Many would say we're
absolutely
overvalued.
10.5 months to go. I don't know.
Right. So to be
a lot of months to
fair,
go.
we could though end up at that point, even though we've blown above it. Having said that, though, Alexandra, are we seeing many on Wall Street basically saying, "Oh, I got to up my target"?
For sure. Surely we're expected to see some more volatility this year. We have an election coming up. We have, earnings that might not live up to the very lofty expectations from Wall Street. But at the same time, the economy is still intact. Earnings so far have delivered. We're expecting a Fed rate cut. And so a lot of Wall Street is actually thinking about lifting their targets. We've already had Goldman Sachs, RBC, UBS, some of the firms that lifted their targets just a couple of months after putting them out at the end of last year. That's very, very unusual. Also kind of undermines the confidence in their forecasts. And you have Bank of America, Savita Subramanian, coming out and saying that she thought that 5,000 was a little bit too low. So it's very likely that we'll see another wave of these banks coming out and upping their expectations for stocks this year.
As soon as that happens, I run for cover.
It's pretty interesting. The lowest target is BCA Research, 3,500 for 2024. Okay, we talk about these sporadically throughout the year. Are these targets useful to you in any way?
They are. It's very interesting to get a sense of, what expectations are and see where the divergences are and what, the arguments are for what stocks will do. Some are very confident that the economy can continue its momentum, but there are the folks like Marko Kolanovic at JP Morgan Chase. He also has a pretty low target. They're among the contrarians, about 4,200 by the end of this year. They still think that we have yet to see the lagged impact of interest rate hikes on the economy, on corporate America.
We just talked about it with private credit. The potential that so far everything looks okay, but maybe it's a case of it's in a year from now or 2 years. Maybe the timeline's just being pushed out. But if the Fed cuts rates or gets very aggressive on cutting rates, that's because there's probably some problems in the economy, potentially. And so you have to think about that. If growth starts to slow down, that's going to have implications, certainly across the financial markets.
Absolutely. One interesting thing, though, that I do have to say, there was a really good note out from Bank of America, though they said that their expectations have nothing to do with what the Fed will do this year in terms of interest rates. So they actually see the S&P 500 still rallying this year, even if the Fed, for whatever reason, doesn't cut rates. So their argument is that they're optimistic because of what the Fed has already accomplished, which is bringing down inflation without tanking the economy. And they say that the consumer is still doing very well, that labor markets remain tight. It's not like all of a sudden these interest rates that have been gradually permeating the economy will suddenly catch up and just, throw everything down. So far, they see that momentum holding up.
Was that the 5,000 price target?
That was the 5,000
so
price target. So I think we're past that. They're going to get even more optimistic, it seems.
All right, going to leave it on that note. Hey, Alexandra, thank you. Alexandra Semenova. She's equities reporter at Bloomberg News right here in our interactive broker studio. Nachos are eaten, the betting is done, the reviews on the commercials, they've been read or watched and all that good stuff. The halftime show is over, and as you know, the winner of Super Bowl 58, once again, the Kansas City Chiefs, back-to-back champions, laying claim to the Vince Lombardi Trophy. It's third in 5 years.
Okay, we're still waiting for the final numbers to land here. But it looks like it could be another record year when it comes to viewership. Lots of headlines to describe the big game that was, including that Las Vegas is a serious sports town now. With more on the game, as well as the former NFL punter who speaks the gambling-infused language of younger fans, we're joined by Felix Gillette. He's media, entertainment, and telecom editor for Bloomberg Businessweek. Felix is also the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. Felix, good to have you with us here in the Bloomberg Interactive Brokers studio. Are you recovered from the game? I mean, you had to watch it for work, right?
I'm just barely half awake.
Okay. Did you watch the whole thing?
I did. I stayed up the whole time.
You know what? Okay, I'm going to go off script here. I had this realization a couple years ago, and it really hit me last night, that I'm prime age for exactly who advertisers want to reach.
Yeah.
I mean, if you look through like who the stars in the ads were, the artists in halftime, it's like all about nostalgia for,
it's all the people you knew as a kid and followed as a kid.
Yeah, so here we are.
Yep.
Here we are.
Indeed.
Okay. All right, I want to start with Vegas, though. Nearly $7 billion has been committed to turning Vegas into a global sports capital in recent years. How big of a sea change is it that sports are now huge in Vegas, given that the NFL has had this relationship with gambling for so long that it was like anathema to the league?
It was completely verboten to do anything in Las Vegas for so long in sports. And, the NFL was very wary of having any events there. The NBA, they had the referee scandal where, a couple of years back, it seemed like, sports, big-time sports were never going to be in Las Vegas. And then, last couple of years, it's just completely gone in the opposite direction, starting with the legalization of betting, sports betting throughout the United States, and then all these sports franchises just embracing the town. And it turns out it's been this very happy marriage, starting with the NHL was the first to get in there, but then the Raiders moving to Las Vegas, potentially Major League Baseball on its way, the women's NBA having a team. And it's been a very happy marriage. I think it all culminated, last night with the Super Bowl. And I'd be surprised if the NFL doesn't go back to Las Vegas again sometime in the next couple of years because it was such a success.
Well, I also thought it was interesting when Disney, ESPN, right, set up shop essentially there. And it just says such a sea change in terms of how they view Vegas specifically. Having said that, the NFL, man, they want to keep going. And they want to appeal to the Tims that are out there, the younger generation that are out there. Pat McAfee is somebody that they're leaning on.
100%. Yeah, I mean, it's really interesting when you take a step back and look at Disney's relationship to betting. Because just a couple years ago, Bob Iger was saying, we're this family-friendly brand. We don't necessarily want to be associating ourselves with sports gambling. And then, lo and behold, last year, they jump in. There's all these problems facing Disney, all these challenges of making this transition from the cable era to the streaming era. They need money. They need a win. So they partner up with Penn Entertainment. They start ESPN Bet and get a lot of money for the brand to move into the betting world. And at the same time, they go out and they hire Pat McAfee for a huge amount of money to become, kind of the face.
Shy,
yeah,
kind of.
yeah. I mean, this is for those of you who don't know. Pat McAfee was a former NFL punter for the Indianapolis Colts. Very funny guy, very outspoken. And after his NFL career ended, he transitioned into sports right at this time when sports betting was taking off in the United States. He built up at first. He had his own, independent media company. He was one of the first to kind of jump on YouTube and start talking about NFL betting, sports betting, what was going to happen in games. Built up a really strong young following among sports bettors on YouTube, to the point where when Bob Iger decided, oh, wait a second, we need to be getting into this, all these challenges facing Disney, all these challenges facing ESPN, how are we going to make this transition into the future? Well, one thing we want in our camp is Pat McAfee, right?
And it's been totally smooth sailing the whole time.
Yeah.
There's not a chance that, a guy like him would potentially alienate a star of one of Disney's other properties, right?
Yeah. So
what happened here?
Well, so Pat McAfee for years had this relationship with Aaron Rodgers, who, the quarterback now for the Jets, who come on his show and just kind of like free form talk about what's happening in the locker room, talking about what's happening in the games. And this continued when ESPN signed Pat McAfee. In January, Aaron Rodgers went on there, said something really stupid on the air, which ESPN and Pat McAfee ended up having to apologize for. In the course of that, there was a story that came out in the New York Post about maybe the ratings don't justify the headache for the show. McAfee kind of blows up on the air, starts calling out ESPN executives, saying these guys are trying to sabotage my show by leaking false ratings. The whole thing is, turns into this big controversy.
And Disney fired him.
No, at Disney Wonder was like, let's focus on the big Super Bowl game and put some bets down on ESPN bet, folks.
We're talking serious money for Pat McAfee, not only for him, but for money behind his show. I mean, I was shocked to see the numbers here.
Yeah, I think part of that is, again, that he has three things that ESPN really needs right now, which is like A, credibility with bettors, B, already a big following on YouTube, and C, a young audience. And, ESPN's going through this very difficult transition of being, a cable satellite TV brand, trying to get ready. Bob Iger said they're going to launch basically a direct-to-consumer version of the flagship channel sometime in the next year. They're looking for investment partners. The NFL has been rumored to potentially be a potential investor. And so, that's the future. They really need that audience, and Pat McAfee helps with that. So if occasionally he goes on and, he also works as a professional wrestling commentator, and he kind of brings that WWE style a little bit to the air. And if occasionally he goes off and starts, criticizing ESPN executives, that's kind of the price they're paying to, have credibility in this new online world.
Just waiting for the Pat McAfee, part of the parks, for the all-in.
Yeah.
Why do you think it's so important?
McAfee World.
McAfee World, exactly. Why do you think it's so important that we know about this guy in terms of, I don't know, what's going on in sports? Again, kind of the NFL feels like there's some really great momentum behind them right now.
Yeah, I just think of Pat McAfee as very much the face of this current era of the NFL, where if you back up a couple years, there were so many problems. We wrote all these articles, the ratings are going down, the grip on the monoculture is kind of teetering. There are always concerns about, player health and head injuries. And, every weekend President Trump was, criticizing the players for kneeling during the national anthem. So much, vitriol around the league. And I think that era has kind of passed, and the new era is really much lighter. It's much more focused on gambling. Taylor Swift is really the primary off-field character. And it's just lighter, it's more fun, it's more convivial. It's like kind of a throwback to just like, escapism. I think of it as kind of NFL escapism. I think Pat McAfee has really ridden that wave.
Okay, I mentioned numbers, so I got to give the details
Yeah.
that are in your story, Felix. In 2022, he struck a sponsorship deal with FanDuel.
Mm-hmm.
That's $120 million over 4 years.
Yep.
Not to mention the $85 million over 5 years from ESPN / Disney.
Well, he walked away from the FanDuel sponsorship when he signed on with ESPN. But yeah, it's, that's what happens when you go out and sign a free agent, right? In sports, it's like you got to pay top market. And yeah, I think, again, his show is a couple hours on the ESPN flagship channel in the middle of the day. It also runs on YouTube, ESPN's free YouTube channel, and it also is on ESPN Plus, their subscription streaming product. Now we're all talking about this joint venture that Disney is doing with Fox and with Warner Brothers. It's going to be a sports streaming channel that's going to launch in the fall, unnamed yet. A lot of details we don't know. Will Pat McAfee be on there? We don't even know that yet. But in the meantime, again, this is like what they need is they need more credibility in that online world. They need people, the YouTube audience, to come watch them.
Very cool profile story. Highly recommend everybody check it out on the Bloomberg and at Bloomberg.com. Felix Gillette, thank you so much. A Bloomberg Business Week.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:21 on Wall Street, 39 minutes to go until the closing bell clangs on Wall Street. We are looking at a mixed market with the Dow trading higher, S&P, NASDAQ, they are both in the red. Dow Industrials now advancing by 105 points, up by 0.3%. S&P down a point, little change there. We've got NASDAQ down 26, a drop there of 0.2%. Stocks are coming off another winning week amid optimism about eventual Federal Reserve interest rate cuts and easing inflation. Caterina Simonetti is Senior Portfolio Manager at Morgan Stanley.
We know that from the messaging that the March is most likely too soon, and they're going to wait and see the data and act accordingly. So we are expecting the first rate cut to come in June, and that we're going to have about 3 of them throughout the year.
And you can hear more of the conversation on the Open podcast. You can download it wherever you get your podcast. 10-year yield, 4.16% right now. We've got the 2-year yielding 4.47%. Gold down $4.50 the ounce to 2019, down by about 0.2%. West Texas Intermediate crude up 0.1%, 76.95 for a barrel of WTI. A mega deal in the oil patch. Diamondback Energy has agreed to buy fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal. Shares of Diamondback Energy, which uses the ticker symbol FANG, they're up now by 9%. Recapping, stocks mixed. S&P down 2 points, down less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So, Charlie, FANG, did we figure it out?
I did. I called the company. It was actually an interesting call because you push 1 for an emergency, push 2 for security, and push 3 for royalty payments, which tells you the list of priorities there for people who are calling the company. Anyway, I left a message, and they didn't get back to me. But here's what's interesting.
All right.
In a situation like this, you go to the Bloomberg reporter. He confirmed absolutely that it's all about Diamondback Rattler. That's their logo. And guess what? They've got an offshore company dealing in minerals called Viper.
It all fits together. Charlie Pellet.
Yeah, TMI. I know what you're saying.
No. It's good stuff. It's good stuff. We've all been talking about it.
Oh, can I just tell you one more thing? When they said they wanted to get back to me, I gave them my email, pellet@bloomberg.net, and they said, how do you spell Bloomberg? Is that U-R-G or E-R-G?
All right. We all know how to spell it. All right, Charlie, thank you so much. Well, at this point, pretty much everyone knows about the crowdfunding platform GoFundMe. Maybe you've donated a GoFundMe campaign to the education fund of the family of a young parent who was lost too young, to a community fundraising for a block party, or maybe even to Alyssa Milano's son's baseball trip to Cooperstown. We'll talk about that a little bit later on.
Yeah, well, the service, along with the fundraising platform for nonprofits called Classy, has raised $30 billion in donations for various causes. We've got the company's CEO with us, Tim Cadogan. He joins us on Zoom from San Francisco. Tim, good to have you with us this afternoon. Thanks so much for joining us. I do want to talk a little bit about hitting $30 billion. It's obviously a big milestone, but I also want to take a step back and get an understanding of what GoFundMe has evolved into in 2024. What is its primary use case right now?
Well, thank you so much for having me, and it's great to celebrate such a notable milestone. GoFundMe is for asking for help for anything that is important to you in your life. That's essentially what it is, and we see almost an infinite range of causes and needs that people are raising money for. You just mentioned some great examples. There are many that people are familiar with, such as raising some more money to help with medical expenses, supporting a soccer team. We, in fact, just had a great example. One of the fraternities over at Stanford put together a fundraiser to help send their chef, who is a really big 49ers fan, to the Super Bowl and raised $16,000 in a few days and sent him. Unfortunately, he didn't get a good result, as we know, but a really great example of helping someone out for something that is important in their life.
Still saw a good game. Either way you slice it. Because they both played so well. Tim, give us a little bit idea. I was curious, on our planning call this morning as we were talking about having you on, about when you look at the platform overall, do most people use it because of a medical cost? Do most people use it to maybe help start a business? I'm looking at the pie where, and I'm trying to get an idea of how people most often use GoFundMe, your platform.
Well, the range is terrific. Medical expenses are definitely an important part of what people do, but the small business example actually is a really important one, particularly when someone is known in a community and they're trying to get a business off the ground, or in some cases, the business has encountered some difficulties. We just had, for example, a very well-known club in Arizona that had to repave its parking lot and wasn't able to get insurance unless it did that. They raised about $30,000 pretty quickly in less than a couple of weeks and were able to take care of that. So there are a myriad of different examples. Another set of examples are kids in various stages of education, study abroad trip, mission trips. Those are pretty meaningful categories as well. So it's really anything that you need help with.
Right.
Some of those can be very, very profound, and some of those can be a little bit more lighthearted, like the example I gave. But what the $30 billion really is it's a reflection of the enormous power of help in our society today.
Right. When so many headlines can be so rough or not so nice, it's nice to see people lending a helping hand. Going back to that pie chart, is the majority of the funding that's done on it to help small businesses?
Not the majority. It's an important category. I think we had about 100,000 campaigns just last year to help small businesses. So that kind of gives you a sense of the order of magnitude of what people are looking for. And the interesting part about it is, while people call our category and what we do crowdfunding, really what it is it's more about fundraising from people that you know. So in many cases, those are from friends, from family members, from extended networks, but those are also from neighbors, patrons, people who want to see you succeed in what you're wanting to do. So in fact, often it's quite the opposite of a crowd, which sort of implies a large group of anonymous strangers. It's more about the people you know wanting to come around and support you for something that you're either going through or something that you're trying to do in your life.
Hey, Tim, I want to talk a little bit about the business. It's a for-profit company. It's a private company. There's a transaction fee on each donation of 2.9% plus 30 cents. And then you can also give money. You can essentially tip when you do a donation on GoFundMe. I think anyone who's used it understands that. How much of that transaction fee plus 30% actually goes to GoFundMe versus the credit card company?
Yeah, so, take a step back. When we designed the business model, we really thought very carefully, how do we get the most amount of money to the person that's asking for help? And how do we also run a company that can continue to innovate and provide the service? So we designed it so that we would set up a transaction fee, which is principally going to the payment processors, the back end banks who take care of the money. And then we'd give donors the option to tip us, and that's the primary way that we generate revenue and run the company. So we keep a very small part of the transaction fee. Most of that goes to our banking partners, who also play a really important role in ensuring the safety and trust in the platform, because they perform a second set of verification checks in addition to the ones that we do, which is, I know, a very important topic for people and one that we've thought a lot about.
Tim, does more money come from that 30-cent fee and the transaction fee than comes from voluntary tipping from donors?
Tipping is by far the majority of how we run the company. We rely on people to make that decision. Fortunately, enough do for us to operate, but also to continue to innovate in the experience we offer people.
I am curious, during the pandemic, how much activity you saw. Was it down a lot or up a lot because a lot more people were hurting?
It was up a lot. Actually, I started at the company on the 2nd of March, 2020, which was a hell of a time to join any company, I guess, but particularly GoFundMe, because that was really the first week of COVID. And what we saw is a very large increase in usage. And we also saw a very large increase in the kinds of campaigns that we hadn't seen before. So, for example, it was the shelter at home, and a lot of businesses furloughing their employees. Those could be bars, restaurants, I live in LA, and you saw a lot of movie production companies having to furlough employees, for example. Saw tens and tens of thousands of campaigns to help a variety of businesses in a whole new way. So not only was it a lot more volume, but also whole new categories that we hadn't really seen before. Typically, the small business cases we see are getting money to get going, getting money to start up, but not for sort of furloughing and helping with employees. So it was an exceptionally busy time for us to enable us to support people going through a very difficult time.
Hey, before we let you go, we have about 30 seconds left, Tim. I'm wondering if there's any fatigue from donors or potential donors at this point, because these are now so commonplace. Are you seeing that on the platform?
We haven't seen that. I mean, to give you a sense, about a little bit more than a third of all American adults have helped someone else on GoFundMe. We're not seeing that decline. Our take is that help is part of what makes us human. It brings us together. We all need help. We all want to help. And the GoFundMe has created a way for people to do that at scale in the digital era. And that continues to grow. And we see that reflected in the numbers. Really interesting. And I am curious, 15 seconds, does it tell you anything about kind of the economic outlook in terms of what you're seeing? Just quickly, if you could. Not hugely. I think the help is much more about what makes us fundamentally human and what brings us together and how we all want to help one another. So it's a little bit less tied to the direct macroeconomics and more just to our inherent nature. Interesting, interesting. All right. Well, Tim, thank you so much for stopping by. Tim Cadogan, he is CEO of GoFundMe, joining us on Zoom from San Francisco. Hey, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The United Nations will not be party to any forced displacement of Palestinians currently living in Rafah. That's the word from the spokesman for Secretary General Antonio Guterres. Israel's Prime Minister Benjamin Netanyahu has ordered his military to prepare for a ground battle in Rafah, where the UN says roughly 1.4 million Palestinians are sheltering after fleeing fighting in other areas of the territory. U.S. National Security Council spokesman John Kirby says Israel needs to plan to protect civilians.
We don't believe that it's advisable to go in a major way in Rafah without a proper, executable, effective, and credible plan for the safety of the more than 1 million Palestinians that are taking refuge in Rafah.
National Security Council spokesman John Kirby, the chief prosecutor of the International Criminal Court, says Israel could face war crime charges if it pushes ahead with a ground invasion of Rafah. It's been a rough few weeks for Defense Secretary Lloyd Austin. He had to be admitted to the hospital yesterday after suffering symptoms related to his ongoing bladder issues. This is Defense Department spokesman Major General Pat Ryder.
Secretary of Defense Lloyd J. Austin III underwent non-surgical procedures under general anesthesia to address his bladder issue. We anticipate a successful recovery and will closely monitor him overnight. A prolonged hospital stay is not anticipated. We anticipate the Secretary will be able to resume his normal duties tomorrow.
Ryder says Austin's duties are temporarily being handled by Deputy Secretary of Defense Kathleen Hicks. A winter storm is poised to dump up to 8 inches of snow on New York City late tonight and into tomorrow. Officials expect it'll snarl the morning and evening commutes. It's also prompting city schools to move to remote learning for tomorrow. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 3:40 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. We've got the Dow higher, S&P, NASDAQ. They are both trading lower. Russell 2000, though, holding on to big gains. That index up now by 2%. Let's get a lot more on the markets as we head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading mixed with the Dow currently higher by 116 points. S&Ps are down 4, while NASDAQ declines by 36. The U.S. 10-year yield at 4.17%. Gold is down 5. Oil trading in the green, but Bitcoin hit 50,000 for the first time since 2021. Among the main 11 S&P sectors, leaders were energy and utilities. Tech and consumer discretionary were under pressure, and leaders to the upside in the Dow, Intel and Goldman Sachs, while Salesforce and Microsoft led to the downside. After earnings, Monday.com fell 11%. And in other news, ARM Holdings soared as much as 42% before pairing gains. Wrapping things up, some of the names reporting after the bell tonight include Arista Networks, Avis Budget, and Lattice Semi. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your terminal, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. It is time for the drive to the close. Great to have back with us Vince Signorella, global macro strategist at Bloomberg News. He's on Zoom from White Plains. It's been a long time. How are you?
A long time. You guys forgot about me.
We didn't.
We
Nobody
never
ever
forget.
forgets about Vince. How are you, Vince?
I'm doing okay. 6 months into partial knee replacement, and actually going up and down the steps like an adult now.
Has it been easier than you thought, harder than you thought?
I have to tell you, the first 3-4 months were brutal. A lot of things that I didn't expect. I guess I was not walking properly, maybe favoring something or other. And back spasms actually hurt way worse than the knee. The knee was actually never really an issue. It was all the other fun stuff.
That's happened. I've had a situation where I had like foot problems and I walked weird and I threw my whole back off and had back spasms. Like it really kind of it gets much more difficult kind of on your overall body. So glad to hear you are better though today. Talk to us about this market environment. I'm curious, as you've been kind of watching the moves, and especially the moves off of the October lows and kind of where we are today, does it feel like you've seen lots of cycles? How does this one feel?
This one's feeling like it's getting a little tired, and it's the general mood of the street. No one's really going to stand in front of this bus because you will get run over. You know, calling tops and bottoms in a market is just kind of a bum's game. It's really hard to do. But you know, you kind of sense when things are getting toward an end, and you hedge for those things, or you sense, you know, when you think something's going to turn higher and you start to hedge for those things. You're never always going to get it like perfectly right. You're always going to lose money in the beginning of that trade. But hopefully you lose a little in the beginning and you make a bunch at the end. What it looks like to me now is we're running on credit fumes. Revolving credits at an all-time high. Credit card balances as a percentage of household debt are at record highs, but they're still surging. So there's still probably more room to go, even though it looks like it's peaking. It hasn't rolled over just yet. And as one trader just said to me was, things are costing more now, so you're going to see higher balances. But you know, in the end, that can't last forever, and it's going to run its course. And as you know as well as I, the U.S. consumer is what drives this economy. And if the consumer kind of runs out of gas, so does the economy, so do earnings, and so likely do risk assets.
Well, so Vince, you wrote about this a little bit today on the Markets Live blog. Talk to us in previous cycles what we've seen and how long it's taken after record credit card debt has been on consumers' balance sheet to hit the market.
Yeah, so in the last two recessions, we've seen things sort of level out for a little while first, and it takes at least a few months, 2, 3, 4 months before things begin to roll over. We just started to see maybe revolving credit rollover. The last Fed report showed a big drop in revolving credit. You don't see that like too often. I'd be curious to see what the next few look like. If we start to see this trend of revolving credit slowing and credit card spending slowing, that to me would be the canary in the coal mine that maybe we're reaching some real exhaustion in the markets.
Yeah, the resiliency of the U.S. consumer has just been head-scratching, to say the least. Some say, Vince, they're working. I mean, we still have a tight labor market. And so as long as individuals or consumers feel confident about their situation, they'll continue spending and maybe are still able to manage that debt.
Yeah, and we saw it again this morning with the Fed's one-year inflation expectations report. The consumers expect inflation to remain relatively unchanged from the last report. No big surprise there. But they're very optimistic about their finances. And that optimism about finances, as you say, is what's driving that spending. So until the consumer starts to feel like maybe their job is in jeopardy, or, there's layoffs at a firm that I work at, and you're concerned that maybe it could be you at some point in the future, spending habits aren't going to change. As long as the money keeps flowing, the habits won't change. But even with that, eventually it does. I mean, there's a limit to how much you can expand credit on the consumer.
The flip side of this, though, Vince, is that consumers log into their brokerage accounts and they see that they're up 22% since a few months ago, and they say to themselves, well, okay, I now feel more comfortable making big purchases because I have this, quote-unquote nest egg. This is the idea of a wealth effect. How does that play out?
I don't know that that's the biggest factor, because I don't know that the average consumer has that much, maybe outside of a 401k or a pension plan of sorts, in terms of real investment in the stock market. I think most of that comes from the housing market, where consumers feel their real wealth. And so far, the housing market is still strong. So yeah, anecdotally, consumers will feel wealthy if their house prices are holding up. And given the lack of inventory, there's no sign, even with higher interest rates, they're just under 7%. Even with the higher mortgage rates, there's really no sign that's turning. Just look at the home builder stocks; they're soaring.
I am wondering, I love looking at the Bloomberg Markets Live blog, and I love kind of seeing the commentary as it goes throughout the day. It's one of my favorite things to kind of check in when I'm looking at just generally of what the market's going on. Having said that, what seems to be the conversations that are most kind of coming up, or that you guys all want to address on the blog?
Today, as I looked at it this afternoon, it seems like I'm not the only one in that tired camp. A lot of folks on the blog are seeing things, I guess the way I'm seeing it as well, in that it just feels like we're reaching levels of exhaustion. I look at technicals as well to support that. And again, there are the three major technical levels that I look at, or studies that I look at. I check them every day because it looks like they're just about to turn, and they haven't turned yet, and they're still driving. And we could potentially, I'm just taking a quick look at the S&P cash at 50.25. One of them is suggesting resistance at 50.80. So we've still got about another 50, 60 points higher to go potentially in the S&P 500 cash before we reach a level on this one indicator, which suggests we might be peaking.
I mean, I just look at something like RSI, Relative Strength Index on S&P 500. We've been overbought since mid-November, and we've had some blips a little bit lower, and then we just move right, higher again. I don't know, when it's so persistent, does that mean that's a bottoming out in terms of, in that it just goes higher, or not necessarily? We've got to see some kind of pullback. Just got about 20 seconds.
I mean, traditionally, you're going to get a 5% pullback in the stock market at least 2-3 times a year. So, it's February. We haven't seen that yet. How the market reacts to that 5% pullback? Do they take it as a buying opportunity, or do they look at that and get a little nervous and maybe turn it into more than a 5% pullback? That's going to be the tell to see how heavily the market is positioned. But if you talk to money market managers, they say there's still a lot of cash out there.
Yeah, we keep hearing that as well. All right, Vince, thank you so much. Glad you're doing well. Great to hear your voice. Vince Signorella, Global Macro Strategist at Bloomberg News, joining us there from White Plains. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Coming up after the close of trading, we'll be getting earnings from Arista Networks, Cadence Design, and Lattice Semiconductor, among other tech names. The Dow, the S&P, NASDAQ trading mixed right now. We've got the Dow holding on to a gain of just about 140 points. S&P, NASDAQ both lower, heading into the closing bell. A mega deal today in the oil patch. Diamondback Energy has agreed to buy fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal to create the largest operator that is focused on the prolific Permian Basin. Today we're looking at Diamondback Energy. That stock up by 9.3%. Endeavor is not publicly traded. Both companies based in Midland, Texas. The agreement is the latest in a string of massive deals transforming the American energy landscape as companies push to line up future drilling sites and cut costs. Glencore plans to sell its stake in a nickel mine and a processing plant on the islands of New Caledonia following a dramatic slump in prices. The French government, which controls New Caledonia, has been weighing a bailout for the island's nickel industry, which has long been beset by technical mishaps, high costs, and social unrest. Gilead Sciences has agreed to buy Simba Bay Therapeutics. It is a developer of an experimental liver disease drug for $4.3 billion in equity value. Gilead offered to buy all of the outstanding shares of Simba Bay for $32.50 a share, a 27% premium to Friday's close. Simba Bay Therapeutics up now by 25.4%. Gilead pushing higher by 0.9%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenovec. In February is Black History Month. And every day this month, we are celebrating significant moments in U.S. Black history. Now with your installment for February 12th, here's Bloomberg's Justin Milliner.
Tim, thank you very much. On this day in Black history, in 1909, the National Association for the Advancement of Colored People, or NAACP, was created. The group was formed partially in response to a deadly race riot in Springfield, Illinois the previous year. Racial violence and lynching were seeming to reach a breaking point at that time, so activists and journalists banded together and they formed the NAACP. Today, the organization continues to advocate for civil rights and fights against discrimination, and current NAACP President Derek Johnson is leading the way.
It's through the NAACP, it's through your efforts that communities across this country have a vehicle for voice. It is in that vehicle that we find the power of our voice.
That's NAACP President Derek Johnson speaking at the organization's 113th National Convention. And the NAACP continues to be an important resource and mouthpiece for equality. And that is today in Black history, Carol and Tim.
Long time. Over
Long
a
time.
century that they've been around. So it's kind of remarkable in terms of how long this division has been around. I wonder, as you go through these, how do you think about these reports in terms of, some of these institutions that were started so long ago and yet we're still dealing with a lot of serious issues.
Yeah, that's really when I look through and I'm doing research, and also as I build, I do the Black Business Beat, which is a daily feature. A lot of times it's sort of a double-edged sword. So you're looking at, well, these organizations do exist, and they have existed for a long time, and they've done good work, and there are a lot of examples of good things and progress that we've made. But there's also a lot of examples of where there's not nearly enough progress, and also examples of where you'll look at something that happened X amount of years ago, and then you'll see, hey, that seemed familiar. Something very similar happened maybe last month or a year ago.
History repeats itself a lot.
History does have a tendency to repeat itself, sometimes for the not so good, but there are signs of subtle progress, and there are good things. I always try to make sure I highlight the things that are going well and progress that we are making.
No, you do, in really a wonderful way. All right, Justin, thank you. Really appreciate it. Justin Milliner joining us here in our studio. All right, folks, just got a few minutes left in today's trade. Right over to our TV colleagues. Beyond the Bell starts right now.
rally here in U.S. equities. A bit of a pause on this Monday afternoon. The Dow Jones Industrial Average is going to finish the day in the green, up by more than 100 points, or about 0.3%. Meanwhile, the S&P 500, little change on the day, down by about 5 points, or roughly about 0.1%, still holding above that 5,000 level, while the Nasdaq dipping back below 16,000, 15,942, lower by about 48 points, or 0.3%. But as Alex Seal was talking about a little bit earlier, the Russell 2000 really shining here. It's outperformed the S&P for 2 straight weeks now, and now starting off the 3rd week with its biggest outperformance versus the S&P 500 all year long.
Yeah, interesting to see that outperformance. Having said that, I'm just going to go back to the S&P 500 here. Despite the kind of meh or unchanged here on the headline number, you're seeing most of the names in the index higher today, guys. 334 to the upside, Scarlett, 167 to the downside, 2 unchanged.
All right, let's take a look at how the sectors stack up right now. And what's interesting here is leading on the downside. I'm going to look at the red part of the pie there first. Infotech is the biggest drag, off by 0.75%. REITs also lower, but you also have consumer discretionary and communication services, which tend to house some of those big tech companies. On the upside, utilities, energy, and materials. You don't see those all gaining on the same day very often anymore.
All right, guys, let's get to some of the individual gainers. I think I saw you guys talking about it on the TV side of things. Obsessed with what's going on with ARM Holdings. Thank you for watching, Carol. I do. I'm a fan. ARM Holdings up 42% at its highs today, finishing with just shy of a 30% gain. I mean, kind of the cray-cray category, if you will, in terms of outperformance. We know it, semiconductor device company, soaring again. Now it's up, I think, around 100% so far here in 2024. Extending last week's rally, which was more than 60% as well. That was fueled by that revenue forecast that the company put out, specifically that far, far exceeded the average of analyst estimates. So it's interesting. There wasn't anything specific today, but investors continuing that 3-day jump to more than 93% in ARM. So pretty remarkable. Energy, that space overall, outperforming in today's session when we look at major sectors. FANG, Diamondback Energy, FANG, of course, is the ticker, up 9.4% here at its close. It was among the top gainers in the S&P and NASDAQ 100. I feel like I should just let Alex talk.
Well, yeah, you didn't invite me on radio. What was up with that?
I know. Well, next time call, because we thought about the same thing. We got into it and we're like, where's Alex? Anyway, she knows the space like no other. But it's like fascinating to see the continued consolidation. Diamondback Energy surging after announced that $26 billion cash and stock deal to buy Endeavor Energy Resources, and they're right across the street from each other. Isn't that wild?
Yeah, you just pack up your boxes and walk across.
It's that easy.
Or don't pack up your boxes, because we're going to save on costs. Anyway, but nonetheless, a deal. Airbnb, I just want to point that one out. That too, Diamondback Energy, I mentioned, up 9% here at its close. Airbnb was among the top gainers in the S&P 500 and NASDAQ 100, up about 4.2% here. Reports earnings tomorrow after the bell, hitting a 52-week high today, highest since about April of 2022. So some outperformance there. Alex, you are welcome anytime.
Okay.
Just knock on the door. Just walk in fact.
We'll see.
All right.
All right, you know where we live. Hey, let's talk about some of the decliners today. I want to start with shares of Amazon falling 1.2%. We did learn late Friday that Jeff Bezos unloaded 12 million shares of Amazon stock this week. It's the first time that he sold stock since 2021. That was last week, I should say. Those sales took place on Wednesday and Thursday of last week. It netted him just over $2 billion. That's according to a filing. We did know this was going to happen at some point throughout the year. Amazon did disclose on February 2nd that Jeff Bezos planned to sell as many as 50 million shares of Amazon over the next 12 months, cashing in on that stock surge that's put him within reach of becoming the world's richest person once again. I should also note at one point today, NVIDIA did surpass Amazon in terms of market cap, but it fell a little bit below that by the end of the day. So for now, Amazon's still worth more from a market cap perspective than NVIDIA. Big Lots, look at this. Shares of Big Lots taking a real hit today. It was downgraded to sell from hold at Loop Capital Markets. It says, the organization says that off-price home goods retailer is in, quote, an increasingly precarious financial situation amid a growing net debt balance. Shares fell as much as 28% earlier in the session. They closed at, well, 28% lower. Yeah. We should say Bloomberg did report exclusively on Friday that Big Lots has been seeking new financing as it grapples with years of losses and dwindling liquidity. That's according to people with knowledge of the company's efforts.
Before we move to yields, I just want to add another decliner here. Shares of Express, they had been halted during during the regular session. They were down about 12%. They're now down about 30% here in after-hours trading. We should just point out this is on the back of a report by the Wall Street Journal saying that they are looking now at some sort of debt restructuring, and it's currently in talks with lenders on debt options. This is, of course, the retailer Express, down 32% here in after-hours trading.
All right, let's get to yields for a second. Nothing happened. Moving on. And I say that literally because nothing is moving.
Well done.
You're looking at 4.19% on the 10-year.
Okay.
We haven't reached it. We're done there. Nada. Remain.
Yeah, absolutely, too. I do want to go back to some other earnings as well. We've been talking a lot about the moves in ARM. I do want to point out that Cadence Design is also lower here in after-hours trading, down about 7%. This is the big chip software design company here. Basically, their 1Q guidance on EPS is a big, big miss there. And then want to turn to another sector here, and this involves the car rental space. Avis budget out with earnings. Those shares also down in after-hours trading, down about 4% here. Revenue numbers for the most recent quarter coming in a little bit light, $2.76 billion. The street was looking for $2.81. Though we should point out, EPS beat by a mile, $7.10 a share on an adjusted basis versus street estimates of $4.15. So assuming that comparison is correct here, a big beat on the bottom line number, but a bit of a miss on the top line.
You know, I'm curious about this whole thing with the big tech stocks continuing. I know that they were kind of flat today, but the S&P 500 continuing to hold up, even with people saying that it's overbought. Athanasios Sarafagis of Bloomberg Intelligence did some research, and it was fascinating. He found that a lot of the buying was probably coming from overseas investors, like from Canada or Europe, and they're piling into U.S. stocks faster than American investors because they're trying to make up for lost time. You know, their indexes have not done as well. Their benchmark have lagged behind the S&P 500, and they've got to make up.
All right. I don't have an easy segue here, so I'm just going to go to it. I am so tired because I stayed up late watching the big game. So there's debate in terms of the Super Bowl, right? That whether or not we should have a holiday on Monday, or maybe just move it to Saturday.
Romaine, why do you support this, Romaine?
Yes.
Holiday's ridiculous. I agree.
Romaine, you're saying yes. Why is that?
Well,
what time did you get home?
I didn't. I came straight into work.
Just
straight
do
into
it on
work.
a
That's how
Saturday.
committed I am.
Just do it on
there.
a Saturday.
I think we're all really
guys.
tired.
Wait, weren't you at the game?
Yeah.
No,
Yes.
no one was at the
Can I interrupt this witty banter for a second
please.
here?
Go ahead.
I just keep an eye. TripAdvisor actually shares a moving higher here. Actually, the company considering strategic options, if you will, forming a special independent committee where they're going to, I guess, look at their options. Doesn't quite say what those options are, but we've seen these types of statements before here. And they says that they do have a mandate to evaluate any proposals here. Those shares at one point were up about 11% here in after-hours trading here. So interesting. We've been talking so much about consolidation in other areas, whether it's energy and some of the other spaces here. Are we going to start to see this in travel?
I wonder how I mean, does it have a lot of travel guys to do that?
I don't know. I have to say,
overbanked, but are we over traveled?
There's also a lot of online travel sites. I don't know about you guys, but it's like it's a little overwhelming when you go to look for a trip, and it's just there's a lot of folks out there, and I wonder, is there some consolidation within that industry? Did you use TripAdvisor to go see the Super Bowl?
No. You know what I use? I use Delta.com or whatever it is.
See?
Yeah. I actually go. I prefer
That's
just to
what I
go
do.
straight to the airline, straight to the hotels myself. I feel like you don't save
Really?
anything. Yes, really. And I feel like you don't really save anything by using, whatever it is, Travelocity, Expedia, TripAdvisor.
I don't think I've ever talked to someone who goes right to the hotel.
Yeah.
This is like an Alex Steele first right now.
Well, all right. Well, nice
do the same.
nice to
Feels
meet
like
you.
a win.
Nice to meet you, Alex Steele.
They are increasingly though. They want you to use their apps. I do the same thing, hotel or airlines. Like I just use their apps.
Yeah, and also I feel like you preserve more of your points and rewards.
Good talk, guys. Good talk.
There you go. You guys are very conversational.
Was it a fun time, Romaine?
I should have taken advantage of it. I don't think I've ever seen Carol that silent.
I don't think Romaine can hear me. He's just ignoring my questions.
No,
over and
I
over.
am. I'm tired.
Okay. Well, welcome back.
I'm running on fumes right now. So
I saw you and Taylor on the screen together.
Did you?
Wait, were you really there, or was everyone just joking?
Yeah, I mean, you didn't see me right there when Usher and
he's
Ludacris
joking.
came out.
No, he was
I was right
really
there in the
there.
back.
You were really there?
Yeah, turned down for what?
Alex, know your co-anchors.
Why do you think
He
he's
was
so
there.
tired?
All right, we have to wrap.
They're like telling us, please leave.
I know. They're telling you, please leave. We're done with all of you. All right, guys. Glad Monday's almost over. All right, that's a wrap. Our cross-platform radio, TV, YouTube, and Bloomberg Originals, including the Super Bowl going. Romaine, we will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
What is Bloomberg Business Week on this Monday afternoon? Carol, one of my friends who's a doctor, he uses a platform called Doximity for a few things. I reached out to him today ahead of this interview to ask him how he uses it. He says, yeah, I use it to make phone calls to patients from his smartphone, so it looks like he's calling from his office no matter where he is. It also helps him with mobile fax stuff. Believe it or not, doctors still do a ton with faxing, which is a conversation for a completely different day.
It is.
And I thought the blockchain was supposed to fix that. All I'm saying is, hey,
Not
blockchain,
yet.
if you're out there, hurry up. Also allows him to do HIPAA-compliant video calls with patients. Should note, the company also does have a social network for doctors, which it says has a larger membership than the American Medical Association.
It's pretty amazing. The company did report earnings last week. Revenue, adjusted EBITDA, and adjusted EPS for the most recent quarter came in above estimates. Revenue, however, for the current quarter came in below estimates. Still, 6 analysts since then have raised price targets by an average of 6.9% on the company's stock. So delighted to have back with us Anna Bryson, CFO of Doximity, on Zoom from San Francisco. The stock, by the way, up about 7.5% year to date. Anna, great to have you back with us. Talk to us about your world and how you describe it, how you see it in terms of business activity and stuff just going on and the use of your platform.
Yeah, well, thank you both very much for having me. I'm excited to be back. And as Tim mentioned, at Doximity, we're focused on bringing tech to medicine. So we're serving the physician community via a variety of tools, such as you said, scheduling, telehealth. We actually are empowering a lot of our physicians with AI lately with our own version of Doximity GPT. And that's leading to record engagement levels across our entire platform. So this last quarter that we just reported, we had record user engagement. We also saw really strong financials with revenue growth up 17% year over year and a record adjusted EBITDA margin of 54%.
So what is Doximity GPT? What does it provide to doctors who use the platform?
Yeah, that's one of the things that I'm most excited by, and I know the team's really excited to work on. So I think one of the most practical use cases of generative AI, especially in healthcare, is reducing the administrative burden. I think one of the most staggering stats I heard recently was that for every hour of direct patient care, a physician then has to spend 2 additional hours on paperwork, which it absolutely blew my mind. And so we recently launched a HIPAA compliant, what we're calling an AI co-pilot that helps medical professionals streamline these time-consuming administrative tasks. And one of the most popular use cases so far is for reimbursement support. So helping doctors draft and fax insurance appeal letters. And it's just the beginning for us. I think we're really excited by what more we can do over time, injecting AI into medicine.
How are you training the AI? This has been a big topic lately, especially when it comes to lawsuits that media companies have filed in recent months as a result of the way that these models are being trained. How are you training Doximity GPT?
It's very important to us. As a HIPAA compliant company focused on serving the medical community, we have always been very, very focused on privacy and security. So all of Doximity GPT data is encrypted, both in transit and at rest, and we're doing a lot of it ourselves internally. We also have BAAs in place with OpenAI and with all of our health system partners that have active GPT license agreements. So we take the privacy and the security very, very seriously.
So I just want to understand what exactly this is and make sure our viewers and listeners understand. So is this licensed technology from OpenAI, or are you actually training your own GPT?
Both. So it's built on top of OpenAI, and then we're training it ourselves.
What would you say is the number one thing that your platform does for doctors?
I think that, well, it's hard to answer that question because there are so many things that the platform does for doctors. Our focus really is to make their lives more efficient, to provide better care for their patients. So I think at the end of the day, if I had to boil it down to one thing we do for physicians, it's save physicians time. They're one of the busiest members of society, and they are constantly overwhelmed with workload, not only seeing patients, but also, like I mentioned, the administrative burden. And on top of all of that, there's tens of thousands of new new medical articles published each week. So they have to stay up to date constantly with changing medical information. And so we also have a newsfeed of medicine where we are helping physicians stay up to date with the most relevant medical information.
Maybe bad question on my part, right? Because you're right, doctors are using it in different ways. But is there a function, whether it's scheduling or something, that they use the most on the platform?
Most recently, it's been our workflow tools. So we have definitely evolved to more of a deskless workforce, right, for physicians. And so they are using our telehealth platform. They're also using our Docs GPT. So one of the stats that we mentioned this past quarter is we had over 560,000 unique active providers utilizing our workflow software.
Which means what for those of us who are in a doctor's office? Like, are we seeing them use it when they're in the office? Sure. Like, help me understand. My doctors are constantly on the computer, or they're with another doctor, and so on and so forth, and everything we say, and they're analyzing it. Are they on your platform?
You might have been on the other end of a telehealth visit. So we are conducting many telehealth visits. A lot of the work that they do is mobile too. So you might see them entering in notes in GPT. They used it for on-call scheduling for themselves. So it's not patient scheduling directly, but the main place where a patient would see the usage would be on the telehealth platform. So I'm sure many people have actually engaged in a Doximity telehealth call, whether you know it or not.
Hey, Anna, you're CFO of the company. You're responsible for the company's finances. A big part of that is planning for the next few quarters and also for the next few years. When you look out across the landscape right now, are you hiring? Are you pulling back? Are you spending more? Give us an idea of how you're thinking about the economy and how you're spending money right now.
Sure. So we're lucky in that healthcare is relatively insulated from some of the broader macro pressures. And as we think about investing in the business, one of the things we're really excited by is utilizing AI not only for our physicians and for our products, but also internally to really help our team practice at the top of their license in the same way we help physicians practice at the top of their license. So as we think ahead, we are focusing on using AI to help our employees be more productive so that they can then focus on more complex tasks.
One thing I'm going to say, one analyst says that you guys are throwing off cash faster than an ATM machine. What are you going to do with that money? You've done stock buybacks and so on and so forth. Do you think about more buybacks? Do you think about dividends? What do you do with it? And just got about 30 seconds.
Sure, we still have a buyback that is running right now. I think the best answer I can give is we're going to continue investing in our business so that we can continue providing physicians with the tools that they need to provide better care for their patients.
I lied. One last question, 15 seconds. Are you guys seeing a lot of questions when it comes to the new weight loss drugs on the platform? Real quickly.
Sure, it's a topic, but our platform is mostly medical information that we're dispersing. So it isn't as much conversation.
All right, good to know. Anna Bryson, thanks so much. Covered a lot of ground there. CFO of Doximity, joining us on Zoom from San Francisco. You are listening and watching Bloomberg Radio. That stock, by the way, 6.5% higher today.
Bloomberg World Headquarters. I'm Charlie Pellet. Lots of earnings after the close of trading, and we've got you covered. Arista Networks reported adjusted EPS for the fourth quarter that beat the average analyst estimate. After ours, that stock down now by roughly 5.5%. Lattice Semiconductor forecast revenue that also missed estimates, down after ours, down right now by about 6.7%. Avis Budget reported America's revenue for the fourth quarter that missed the average analyst estimate. Avis revenue came in at $2.76 billion. Estimates were for $2.81 billion. After ours, we got Avis Budget down now by about 0.8%. Turned out to be a mixed day on Wall Street. We had the Dow Jones Industrial Average gaining today. The Dow was up 125, up by 0.3%. The S&P paused its massive rally, down today by 5 points, down 0.1%. Ending the day at 5,021. NASDAQ was down 48, a drop there of 0.3%. Perhaps so the big story in the markets, the Russell 2000 index of small cap shares keeps on going, up another 1.75%. 10-year yield, 4.17%, with a 2-year that's yielding 4.47%. Gold down $4 the ounce to 2020, a decline of drop there of 0.2%, while West Texas Intermediate crude up 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Straight to the White House we go. President Biden making some comments.
Coming out. At any rate, we've known each other many years, and His Majesty's been a good friend all those years, a steadfast partner alongside the Queen, and a beloved leader to their people. The partnership between the United States and our ally, Jordan, is strong and it is enduring. Today, the King and I discussed with our senior foreign policy staffs what the issue that's front and center in the Middle East and well beyond. The war between Israel and the terrorist organization Hamas. Over 4 months ago, on October the 7th, Hamas attacked Israel in an act of sheer evil, massacring more than 1,200 innocent women, men, and children. The deadliest day for the Jewish people since the Holocaust. More than 250 hostages were taken. 134 are still being held hostage by Hamas. We don't know how many are still alive. The anguish that their families are enduring week after week, month after month, is unimaginable. And it's a top priority for the United States to bring them home. I've made clear the United States shares the goal of seeing Hamas defeated and ensuring long-term security for Israel and its people. After October 7th attacks, Hamas retreated back into Gaza, where its leaders live in underground tunnels stretching for over 100 miles beneath civilian infrastructure, including schools, playgrounds, and neighborhoods. The past 4 months, as the war has raged, the Palestinian people have also suffered unimaginable pain and loss. Too many of the over 27,000 Palestinians killed in this conflict have been innocent civilians and children, including thousands of children. And hundreds of thousands have no access to food, water, or other basic services. Many families have lost not just one, but many relatives, and cannot mourn for them, even bury them, because it's not safe to do so. It's heartbreaking. Every innocent life in Gaza is a tragedy, just as every innocent life lost in Israel is a tragedy as well. We pray for those lives taken, both Israeli and Palestinian, and for the grieving families left behind. Not only do we pray for peace, we're actively working for peace, security, and dignity for both the Palestinian people and the Israeli people. And I'm working on this day and night with the King and others in the region to find the means to bring all these hostages home, to ease the humanitarian crisis, and to end the terror threat, and to bring peace to Gaza and Israel, enduring peace with the two-state solution for two peoples. As the King and I discussed today, the United States is working on a hostage deal between Israel and Hamas, which would bring an immediate and sustained period of calm to Gaza for at least 6 weeks, which we could then take the time to build something more enduring. Over the past month, I've had calls with Prime Minister Netanyahu, as well as the leaders of Egypt and Qatar, to push this forward. The key element of the deals are on the table. There are gaps that remain, but I've encouraged Israeli leaders to keep working to achieve the deal. The United States will do everything possible to make it happen. The King and I also discussed the situation in Rafah. As I said yesterday, our military operation in Rafah, the major military operation in Rafah, should not proceed without a credible plan for ensuring the safety and support of more than 1 million people sheltering there. Many people there have been displaced multiple times, fleeing the violence to the north, and now they're packed into Rafah, exposed and vulnerable. They need to be protected, and we've also been clear from the start. We oppose any forced displacement of Palestinians from Gaza. Today, the King and I also discussed in detail how to get more humanitarian aid into Gaza from the very beginning. My team and I have relentlessly worked to get more aid in. I urged Congress for months to make sure that our nation's support for Israel and also includes urgently needed aid for innocent Palestinians. And I've spoken repeatedly with partners across the region, including the King, to help facilitate the flow of such aid into Gaza as much as possible, and then to actually get to the people that are needed. We work to get the Rafah crossing open. We work to get Karim Shalom open, and we insist that both remain open. We're working to open other routes as well, and we're also working relentlessly to make sure aid workers can get the aid where it's needed once it gets through. I want to recognize Jordan and the King specifically for all he has done to provide humanitarian aid to Gaza, including just a few days ago. He personally got in a plane and helped conduct an airdrop of urgently needed medical supplies into Gaza. I understand that 2 of his children have also joined those airdrops. They helped fly humanitarian supplies in. And for years, the Queen has been a passionate advocate for the Palestinian people, particularly women and children. Your family's leadership, Your Majesty, and humanitarian commitment are commendable. And at the same time, we're working to create the conditions for a lasting peace, as we talked a lot about upstairs. With the Israeli security guaranteed and Palestinian aspirations for their own state fulfilled. I say this as a lifelong supporter of Israel. That's the only path that guarantees Israel's security for the long term. To achieve it, the Palestinians must also seize the opportunity. As discussed with the King today, the Palestinian Authority must urgently reform so it can effectively deliver to the Palestinian people in both the West Bank and Gaza. Once Hamas's control of Gaza is over, they must prepare to build a state that accepts peace, does not harbor terrorist groups like Hamas and Islamic Jihad. And together, we will keep working to complete what we started, to integrate the region, to bring about peace between Israel and all its Arab neighbors, including the Palestinian state. That effort was already underway before October 7th attacks. It's even more urgent today. No one understands better than our allies and partners in the region, including the King, what we need. I'm grateful to him for his friendship, including his and Jordan's unique role, custodian of the holy sites in Jerusalem. We're grateful for this friendship. We saw that again just 2 weeks ago when 3 brave American servicemen were killed in an attack at a military outpost in Jordan, close to the Syrian border, by radical militant groups backed by Iran operating in Syria and Iraq. Since then, U.S. military forces have struck targets in Iraq and Syria. Our response will continue. We're grateful to our partners and allies like the King, who work with us every single day to advance security and stability across the region and beyond. It's difficult times like these when the bonds between nations are more important than ever. And Jill and I are pleased to welcome him and the Queen and the Crown Prince to the White House today. Your Majesty, over to you.
Mr. President, thank you for your gracious hospitality accorded to me and my delegation today. My visit today carries an added meaning as our countries this year mark 75 years of exemplary strategic partnership. However, we had hoped we would be marking this major milestone during better circumstances in my region and the world. Unfortunately, one of the most devastating wars in recent history continues to unfold in Gaza as we speak. Nearly 100,000 people have been killed, injured, or are missing. The majority are women and children. We cannot afford an Israeli attack on Rafah. It is certain to produce another humanitarian catastrophe. The situation is already unbearable for over 1 million people who have been pushed into Rafah since the war started. We cannot stand by and let this continue. We need a lasting ceasefire now. This war must end. We must urgently and immediately work to ensure the sustainable delivery of sufficient aid to Gaza through all possible entry points and mechanisms. And I thank you, Mr. President, for your support on this. Restrictions on vital relief aid and medical items are leading to inhumane conditions. No other UN agency can do what UNRWA is doing in helping the people of Gaza through this humanitarian catastrophe. Its work in other areas of operation, especially in Jordan, where 2.3 million are registered, is also vital. It is imperative that UNRWA continues to receive the support it needs to carry out its mandate. The potential threat of Palestinian displacement beyond the borders of Gaza and the West Bank is something we view with extreme concern and cannot be allowed. At the same time, we must not ignore the situation in the West Bank and in the holy sites in Jerusalem. Nearly 400 Palestinians have been killed in the West Bank since October 7th, including almost 100 children and over 4,000 injured. Continued escalations by extremist settlers in the West Bank and Jerusalem's holy sites and the expansion of illegal settlements will unleash chaos on the entire region. The vast majority of Muslim worshippers are not being allowed to enter Al-Aqsa Mosque. Christian churches have also voiced concerns about increasing and unprecedented restrictions and threats. It is also important to stress that the separation of the West Bank and Gaza cannot be accepted. 7 decades of occupation, death, and destruction have proven beyond any doubt that there can be no peace without a political horizon. Military and security solutions are not the answer. They can never bring peace. Civilians on both sides continue to pay for this protracted conflict with their lives. All attacks against innocent civilians, women and children, including those of October 7th, cannot be accepted by any Muslim, as I had previously stressed. We must make sure the horrors of the past few months since October 7th are never repeated nor accepted by any human being. We must together, along with Arab partners and the international community, step up efforts to reach a ceasefire in Gaza and immediately start working to create a political horizon that leads to a just and comprehensive peace on the basis of the two-state solution. An independent, sovereign, and viable Palestinian state with East Jerusalem as its capital, but living side by side with Israel in peace and security. This is the only solution that will guarantee peace and security for the Palestinians and the Israelis, as well as the entire region. Your leadership, my dear friend, Mr. President, is key to addressing this conflict, and Jordan is ready to work, as always, with you towards peace. Thank you.
All right, everybody, you are listening to live coverage of President Joe Biden along with Jordan King Abdullah at the White House specifically. We were thinking that they might take some questions, but a relatively short press conference. At the end, King Abdullah saying to addressing President Biden, your leadership is key to addressing this conflict in the Middle East. He said this is one of the most devastating wars in his history. Again, this is from King Abdullah. And he also said we cannot afford an Israeli attack on Rafah. And before that, of course, President Biden spoke to him.
Yeah, the president saying the U.S. is working on a hostage deal between Israel and Hamas. The deal seeks calm in Gaza for at least 6 weeks. Refugees in Rafah need to be protected, the president said just moments ago. President Biden also said that they're working to open other humanitarian corridors for Gaza. Again, the president making those comments just moments ago, along with Jordanian King Abdullah II, delivering remarks following a meeting at Cross Hall at the White House.
All right. Certainly look for more coverage on that. But again, relatively brief comments, but certainly addressing pretty soberly, as you would expect, that conflict, ongoing conflict in the Middle East between Israel and Hamas. All right now, let's get a check on how the markets ended up, some of your top business stories. Back to the markets we go with Charlie.
Hi, thank you very much. And here's what's going on. The Dow higher today, S&P, NASDAQ both move lower, but perhaps the big story, look at the Russell 2000 rallying today by 1.75%. To put that in context, the S&P today was down by 0.1%. NASDAQ lower by 0.3%. The Dow held on to a gain, up another 0.3%. Another record there, 38,797 on the Dow Jones Industrial Average. 10-year yield 4.17% with a 2-year 4.47%. Gold today down $4.50 the ounce to 2019, a drop of 0.2%. While West Texas Intermediate crude advanced 0.1%, 76.95 a barrel. Cannot ignore Bitcoin up today by 4% right now with a 50,000 handle once again, 50,059 on Bitcoin. So a mixed day for the U.S. stock market. The Dow higher, S&P, NASDAQ both lower. Vince Signorella is our global macro strategist, and he was a guest right here on Bloomberg Business Week. He told us if you want to know what's going on with the market, pay close attention to the consumer.
So until the consumer starts to feel like maybe their job is in jeopardy, or, there's layoffs at a firm that I work at, and you're concerned that maybe it could be you at some point in the future, spending habits aren't going to change. As long as the money keeps flowing, the habits won't change. But even with that, eventually it does. I mean, there's a limit to how much you can expand credit on the consumer.
And you can hear more of that conversation on the Bloomberg Business Week podcast. ARM Holdings surging again today, extending last week's rally that was fueled by a revenue forecast that far exceeded forecasts. ARM Holdings today surged 29.3%. Recapping a mixed Monday, the S&P lower by 4, down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for this update, Charlie Pellet. Really do appreciate it. Okay, Carol, check this out. According to Nielsen, Black audiences spend more time with media than any other group in the U.S.
Yeah,
it's really interesting. We want to go deeper on the audience, the opportunity, and also the lack of diversity when it comes to the C-suite. We've got with us Michelle L. Rice. She's the president of TV One and Clio TV. TV One programming focuses on Black adults and consists of, in the network's own words, quote, a broad mixture of original lifestyle and entertainment-oriented series, documentaries, films, music performances, and reruns of sitcoms from the 1970s through the 2000s. Michelle joins us from Silver Spring, Maryland. Michelle, good to have you with us this afternoon. How are you?
I'm good. How are you? Thank you for having me.
Yeah, thanks so much for joining us. We do appreciate it. Hey, first, I just want to talk about the business, because you've been doing this for a bit of time here, and the TV industry, you don't have to tell us, I mean, we're in it, has changed so much over that period of time. I mean, how are you thinking about the landscape right now?
It's still very robust. As you said, I've been doing it a long time, and certainly there's just so much fragmentation in media. We're going through a significant period of disruption, with all between linear cable TV services and all the streaming services and digital. There's just so many places for consumers to get content. But we still are very bullish on the business. We still think it's a robust business to be in. Great margins, great cash flow. For us, it's a dual revenue stream between our affiliate fees and ad fees. And cable ad fees it's like the $20 billion marketplace. So We're still happy to be in this business, albeit it is a difficult business, as you already stated.
Let's go there, Michelle, because I'm listening to you and I'm like, wait, this sounds like a cable conversation I would have had 10 years ago or 20 years ago. But it's interesting, especially with the growth of streaming. And we are talking about how streaming is becoming like the old cable with bundling, if you will.
Right.
But that how kind of the old cable networks just don't make sense, and certainly old linear doesn't make sense. You say robust, dual revenue. Talk to us a little bit more about the business and how people watch you and dig a little bit deeper into how you guys are making money. Because is it all ad-based or no? It's not. It's subscriber fees and
so for cable TV networks, it's a dual revenue stream. So we do get affiliate fees from our affiliates, Comcast, AT&T, Verizon, all of those are affiliates. So we get license fees from agreements with them, as well as ad revenue. So, fortunately, it is a dual revenue stream business. So, it's still good cash flow. Obviously, with all the fragmentation and churn of subscribers leaving the business with cutting cords. As I said earlier, it's being disrupted, but we are still bullish on content. It's still a good business for us.
But wait,
we're a diversified media company as well. I think that's also key, that we're not just in the cable TV business. We have digital assets, we have syndicated radio and radio. So that helps. And our CEO, Alfred Liggins, who's the CEO of Urban One, our parent company, continues to look for opportunities to diversify.
Where's the most growth, excuse me. And I guess I want to go back to advertising, because we keep hearing from so many different sources that the ad market in media is not necessarily that strong. Would you disagree, at least for your world?
Well, as they say, flat is the new up. I'm not saying it's growing exponentially.
Yeah.
But, we are still, we have a very strong audience target segment, African-American adults. African-Americans have a $1.8 trillion buying power. So, there's still products and services that people want to target to this audience. And it's an efficient buy. I think it's still a good business.
So how are you building the relationship or thinking about building the relationship directly to that audience rather than always relying on the cable company to deliver that message? We got news last week that 3 companies are teaming up to sort of create the Hulu of sports. And I asked our Bloomberg Intelligence analyst, Geeta Ranganathan, about that. And she said that because it's sports, it could be the beginning of the end of the cable bundle. So if we do look beyond the cable bundle, how have you built that relationship with these people without going through the cable companies?
I mean, to each his own. We obviously are looking at ways to do content direct to our consumer group. Do we think that we're going to do the BET type plus model? We don't know yet. It's a significant investment to invest into an OTT business. I mean, we would have to continue to feed the beast with content. Content is not cheap anymore, and you can't lock consumers into a subscription service. I know as a consumer, I see something that I want to watch on a platform. I may buy it 1 month, 3 months later, I'm going to cancel it. I think it's a business that we're continuing to take a look at how we continue to grow. So I don't have an answer for that right now, other than it's something that we are looking into. But for us right now, we're not interested in putting our money into an OTT business that would really cause us to make a significant investment in content. We're going to continue to just invest in the platform that we currently have.
That's really interesting to hear. Where it's like, because everybody else is doing that, OTT platform, right? So that's really interesting to hear from you.
Yeah. I mean, and I think you will probably also say everybody else hasn't really found a way to make it profitable.
Yeah.
So again, it's not something that we're willing to, burn cash on at this point. Not only that, we're in these relationships with our affiliates, and we're also waiting to see what happens there. You see people launching Plus and Max services, and they are quite frankly, some of them are cannibalizing the cable TV ecosystem by doing so. If you're premiering first on your Plus service and then, repurposing content on your linear platform, that may be the demise of, or a faster demise of your other channel. And frankly, I'm sure it's causing quite a contentious relationship with the affiliates. So there's a lot to work out there.
Well, and it's interesting, Michelle, like, what have you guys learned about your audience? I mean, I think about the importance of having, network and various media properties, if you will, in terms of really targeting an audience, right? That probably feels underrepresented in kind of traditional media outlets. And so there's got to be a lot of value in that, one would assume.
Yeah, I mean, the Black consumer is, and we've said there's one of the reasons that Urban One went into this business at the time that they did we're celebrating 20 years, by the way, just 20 years. TV One is 20 years old, and Clio TV 5 years old. So 20 years ago, when our CEO set out to launch this network, there was only one that was targeting African-American adults. And so we launched TV One as an opportunity because, Black people are not monolithic. We see the buying power of this audience. And also, they are the largest consumers of digital products and services. And they're not leaving the cable ecosystem as fast as others are. And so I think that they will stick around. And they watch advertising. One of the things that when we launched our network, we saw that we had a very long length of tune with our consumers as well. So they watch through the ads. They're very loyal consumers. And so it is a highly coveted consumer, and we're an efficient buy to get to them across all of our platforms. So it's not just cable. We have a one solution platform with digital, with our cable TV networks, our radio networks. So we're a very efficient buy. And also we speak to almost 80% of Black America every single day across all those different platforms.
Totally get it. Like if somebody, if an advertiser or somebody they know truly what the audience is. Before you go, we have about a minute or so left. What's it been like for you acquiring a very senior position in a world where women generally are so still underrepresented? And if you're a minority, I'm sure it's just even a tougher nut to get there. What's that been like for you?
It's been a great journey. I wouldn't trade anything for my journey. And I think, working at a company that was founded, by my parent company, Urban One, by a woman, Kathy Hughes, who founded Radio One. Urban One was formerly Radio One over 42 years ago, has been, invaluable. She's been a great mentor, a great advocate and sponsor to many women. And most women in business, as you know, don't get sponsors. And having a woman who launched this company, you certainly can't say that women can't lead.
No, and it's so important when you talk.
Not only did she lead, she founded the company. And so the opportunities at our company have been amazing for women. There are lots of women in senior management.
Michelle, come back soon. We would love to continue this. Michelle Rice, president of TV One and Clio TV, joining us from Maryland.
Bloomberg Radio continues its market coverage well past the close of U.S. trading with Bloomberg Daybreak Asia tonight at 8 p.m. Wall Street time. Join Brian Curtis and Doug Krisner live from Hong Kong and New York tonight at 8 on Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. This year's Super Bowl, which aired on Paramount CBS, is behind us. Brands spent up to $7 million per commercial. Brian Weezer is principal at Madison and Wall.
Fox last year, I think, generated about $600 million in revenue, and presumably Paramount will see more than that. From a marketer perspective, keep in mind, advertising is a least bad alternatives business. It's not about whether something is good or bad. It's about whether it's better than the next best alternative. And for the sake of reaching a massive audience, getting this water cooler effect, building a campaign, building brands, there really isn't anything comparable to the Super Bowl.
The day after the big game, we had shares of Paramount advancing today by 4%. Mega deal in the oil patch. Diamondback Energy buying fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal to create the largest operator focused on the prolific Permian Basin. Today we had Diamondback, which uses the ticker FANG as in Fang, up by 9.4%. Endeavor is not publicly traded. Both companies are based in Midland, Texas. Gilead Sciences has agreed to purchase Cima Bay Therapeutics, a developer of an experimental liver disease drug, for $4.3 billion. Today we had shares of Gilead climbing by 1%. The big story, though, Cima Bay up today by 25.4%. Hewlett-Packard Enterprise seeking as much as $4 billion from Autonomy Corp's former bosses following a London judge's finding that they fraudulently boosted the value of the company before its sale. Hewlett-Packard Enterprise today up by 0.8%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, Tim and I getting ready to wrap up on the Monday edition of Bloomberg Business Week, and I gotta tell you, I can't come soon enough. I am still exhausted.
It's called a hangover from the Super Bowl,
I didn't drink. It was just nachos.
Well, it's a nacho hangover. You know who wasn't having a Super Bowl party last night?
Doug?
Yeah, Doug Krisner. And you know why?
Because he was working away?
Because it was Monday morning in Asia, and Doug Krisner is here getting ready for Tuesday morning in Asia. Doug, how are you?
I'm doing well.
Good.
I'm doing well. So it was Lunar New Year. So every market, with the exception of Australia and New Zealand, closed yesterday. So we had South Korea and Japan out there back online today. They don't really kind of mark the traditional Lunar New Year holiday, but other markets, Hong Kong, Taiwan, mainland China, they were all closed to
How long are they closed for?
Mainland China is out for the entire week. They won't resume trading until Monday the 19th.
Okay, so long.
So whatever happens now, there's going to be a period of catch-up. And we're dealing with a lot in the way of economic data here in the U.S. It's CPI tomorrow, retail
I'm thinking
sales.
Chinese officials are happy to maybe close the market for a little while.
Maybe,
it's been a little tortured.
and this is going to be very interesting to see what some of the high-frequency data tell us in terms of how well Chinese consumers are responding. This is a very important holiday, right? A lot of spending. We'll see if it, if it juices the economy.
You know who did
just
a lot of spending last night on the big game?
Yeah, Temu?
Yeah. I was surprised. I think they said they had like six Super Bowl ads.
Plus, they think they have a lot more in the way of incentives, too. So I don't even know what the marketing budget for this company happens to be. But they're losing users in the United States, so this may be a desperate attempt. But when you're up against a company like Amazon, what are you going to do?
It's funny because I was in the makeup room this morning. Does anybody use it? And one of our folks there said yes.
What's the advantage of using it versus? Do you get lower prices? I don't even know.
I forget how it works. I don't know. I've never used it. I can't remember what he said. Whether there was an advantage.
Here, there's some really interesting data. Temu's January sales were actually up 805% versus January of 2023, according to Second Measure data. That's from Bloomberg. Quadruple the growth of second place space exploration technologies, and far above, which is SpaceX. I don't know. Oh, you know why? Because people are paying that for Starlink, far above rival Amazon's 1.7%. That's interesting.
I'm Googling how does Temu work. I don't know, Doug.
I don't use Temu.
Okay.
I don't use it. But
There'll be a quiz tomorrow.
But the growth has ebbed since April, so it's been sort of a short term. Check it. There's a great story on the Bloomberg all about Temu and what it.
I was just shocked about the amount of ads that they had. So they are definitely trying to target the U.S. market.
Absolutely.
What's top of mind for you?
It's a good question.
It's that kind of a day. It's a little bit of marking time, I feel like.
Because, so many markets are closed for the holiday.
CPI tomorrow.
Yeah, CPI tomorrow. I mean, I was talking to Liz McCormick, who covers the Treasury market.
Yeah.
Did you see her crunching of the Citigroup story?
No.
One of the things that strategists over at Citi were saying is be prepared for a very short easing cycle and a risk that things will have to, that the Fed may have to tighten.
But isn't this what the Fed wants to avoid? That's what Jay Powell talks about.
Yeah, I think that's right.
I want to get this
But the analog that I think that they're arriving at is something that happened in 1999, and I had to pick up the phone and call Liz today because she put into the story that the Fed actually raised interest rates in mid-99, and I didn't remember that. I remember the dramatic easing around long-term capital, everything that we were dealing with around the Asian financial crisis, but I remember the Fed being so fearful going into Y2K that they didn't want to tighten any liquidity. But she was right. I went back, she walked me through the function on the terminal, and you see a little spike. It may have only been kind of a 25 basis point hike, but that was like in mid-year of 99. But then the dramatic tightening happened after we got past Y2K, and that's what punctured the bubble in the NASDAQ.
But did you think about it, right? Nobody's really pricing that in. So if you have a
Tom Barkin today was talking about the fact that American companies were able to raise prices.
I think that's an important
And he
story.
doesn't think that that's going to be reversed anytime soon, and that's only going to add to inflation.
About